Okay. So let's take a look at. So this is the handout that I've posted, Chapter 6 handout. It's got two questions. I'm going to work the first. Now, this is a bank reconciliation problem. So if you are keeping up and you saw the content from yesterday, you've already seen one. So my strong suggestion is that you attempt to work it on your own and then come back and watch the video if need be. I will have posted the Excel file, so if you nail it, then you may not need to use this video. But my strong suggestion is that you attempt to work that if you're today April 1st content, uh, you should be able to handle this, or at least get most of it correct. Uh, and so work it on your own, then review this video. Okay, let's get going. For Topper Company, we have the following transactions. All right, and we'll do piece by. But let's see what the question is asking. Prepare the July bank reconciliation and related adjusting journal entries for the Topper Company. All right. So let's. All right. So the format you should be familiar with. Um, we're going to have bank balance and book balance. All right. All right. And we'll actually need. I'm going to insert a couple columns here. All right. And so we'll have some additions on each side. And some deductions. All right. Let's do the transaction data. So July 31st, after all transactions have been recorded, the balance in the company's cash account has a balance of 15,244. Okay. That's the for the accounting balance. All right. Part company's bank statement balance on July. I think it should be July 31st, 16,450. All right. So we took care of A and B. Now we're at C. Outstanding checks at July total $2,063. All right. So an outstanding check is a check that's been written but not yet cashed by whoever it was written to. All right. So in other words, when you write a check, you reduce the book balance, right? The bank doesn't reduce their balance until the check is presented for payment or otherwise cashed. All right. So we're going to deduct outstanding checks. All right. From the bank balance, because when those checks are presented for payment, that's exactly what the bank is going to do. All right. D. A credit memo included with the bank statement indicates the bank collected $570 on a note receivable for Topper. The $570 includes $550 principal and $20 in interest. All right. So the bank collected $570. All right. And on behalf of Topper Company. So we need to add that. That hasn't yet been recorded in the book, so we're going to add that. Notes receivable collection, $150, and interest. All right, we want to keep those separate because when we need to do our adjusting interest, we obviously track interest separately from notes. All right, we're on to E, debit memo. So if a credit memo is the bank telling you they've added to your account, then a debit memo is saying that something has been subtracted from the account. All right, and E says debit memo, the bank statement shows $100 check from customer P Flank. All right, well that's a bounced check. Well, think about what happens when you've increased the cash balance and sent the check to the bank. Bank, so we have to back that back out. All right. NSF check, that means non-sufficient funds check. All right. F, deposit placed in the bank's night depository on July 31st, totaling $1,275, did not appear on the bank statement. All right, so there's your deposit in transit. All right, and of course we add that to the bank balance because that's exactly what the bank's going to do when they process that deposit the next business day. So it could be August 1st or whenever the next business day is. The bank would credit for the amount placed in the night depository. All right. Looks like we got one less transaction, or one last transaction, I should say. Included with the bank statement was a debit memorandum in the amount of $45 for check printing charges that have not yet been recorded on the company's books. All right. So again, debit memorandum means the bank has taken money from your account. We need to record that, and we'll call this we'll just call this bank fee. All right. So we've got a couple of deductions here. Let's to do some subtotals, just to make the reconciliation look better. total additions, deductions. All right. And then we'll have adjusted balance. All right. And so your adjusted balance is the beginning bank balance, or let me just say the bank balance plus the additions less the deduction. All right. And we'll do the same on the other side. Just and I did that kind of quick, but the formula is book balance plus the additions less the deductions. And if we're living right, the adjusted balance is equal, right? And that's some indication that we've done this problem correctly. All right. If they don't agree, then you've missed something. All right. This is the first thing that this problem asked us to do. It also asked for the related AJEs. All right. So you may recall that when you do the bank reconciliation, everything that shows up as an adjustment to the book balance is an unrecorded transaction, which we now know about, and therefore we need to record. All right. Now, keep in mind, you've got half the journal entry, because if it's an addition, you're debiting cash. All right. And if it's a deduction, you're crediting cash. All right. So let's start with the addition. All right. We've got a collection of note receivable and some interest revenue. Of course, we'll date these as of the date of the bank statement. Note receivable, interest revenue. All right, so that's the first entry. And the second, well, you've got half the entry. We're going to credit cash. So NSF check, well, that's a bounce check. You're going to put that back into a receivable, all right, and try to collect that money. You're going to send a notice to Mr. P. Flank. Your check bounced. We're adding $35 fee to it. Please pay us immediately, if not sooner. All right, so that's what would happen with that. And then bank fees for us, and so we're consistent with Connect. That's a miscellaneous expense. All right, which we will, it's $45. And then all right. So we're done. All right. So that's what that problem looks like. Hopefully you got a chance to work it before looking at the demo, and definitely follow up if you have questions. All right. Till next time.